In Malaysian finance and real estate, AI integration and real-world asset tokenization are rapidly consuming market share. If an institution is not aggressively upskilling its senior leadership in these specific technologies, it is actively losing its competitive edge. The primary barrier is cost. Premium deep tech training for specialized cohorts is exorbitantly expensive, making it a nearly impossible request for new operational expenditures in a tight economy. This chart highlights the contradiction at play. On the left, we see massive out-of-pocket quotes for premium AI and blockchain training. On the right, large unused funds sitting as a sunk cost in corporate HRD Corp Levy accounts. The November 2024 allowable cost matrix update created a specific legal mechanism to bridge these two metrics. Executives do not need to fight for CFO approval for new budgets. The capital is already secured. It is just a matter of navigating the specific regulatory requirements to deploy it. The core of the new HRD Corp rules is the strategic separation of training into distinct pillars, moving well beyond generic compliance courses. This is the Allowable Cost Matrix Guidebook, the official regulatory framework dictating exactly how these funds can be deployed. It introduces the focus area classification, explicitly targeting advanced tracks like fintech, blockchain, Industry 4.0, and future technology. The exclusion criteria are strict. Introductory classes, foundation programs, and general broad topic seminars legally cannot qualify for this classification. By accurately matching advanced RWA and AI training to these specific pillars, companies transform a mandatory tax burden into a high-yield innovation fund. This forces a clear administrative choice for L&D directors. Register your deep tech training as a standard general course or as a focus area course. This matrix shows the stark difference. The general course pathway hits a hard red ceiling of Rn $10,500 per day, forcing companies to pay out of pocket for elite trainers. Look at the focus area column. Fees are claimable as per charged, effectively removing the daily cap. There is an immediate cash flow advantage as well. Under the HCC scheme for focus areas, employers can request up to a 30% upfront payment upon grant approval, securing high-demand trainers without tying up company cash. The focus area classification removes the financial ceiling on deep tech upskilling, shifting the massive cost burden entirely from the company's bottom line to the HRD Corp Levy. Uncapped funding is not free. It is paid for with intense administrative rigidity and zero margin for error. This diagram outlines the mandatory bureaucratic gauntlet your application must survive. The evaluation stage requires industry expert committee verification, which operates on a strict 10 working day service level agreement. There is also a hard deadline. Unlike the old rules, grant approval must now be fully secured exactly 14 calendar days before the training commences. Because the quoting is per PAX, you carry the attendance risk. Funding is prorated on actual attendance completion, meaning a minimum of 75% of total hours must be logged. The financial liability is real. If a busy executive skips the training, or if a program is canceled after receiving an advance, HR must manually claw back and refund the money to HRD Corp within 1 month. The trade-off is absolute. Institutions gain access to uncapped financial resources, but they must operate with zero tolerance for last-minute planning, administrative errors, or executive absenteeism. This strategy is for forward-thinking institutions with unutilized levies, dedicated L&D administrators, and a mandate to deploy RWA or AI tech. If your firm is seeking broad, casual intro to AI seminars for the whole office, avoid this route. Stick to the capped general courses. To leverage focus area funding, clear 3 strict checkboxes. Requirement 1. The curriculum must be advanced, hands-on, and tech-driven. Requirement 2. A 30-day administrative timeline buffer is required before the training date. Requirement 3. Executive attendance must be guaranteed and strictly enforced. Treating the ACM as a strategic tool means knowing when to deploy the heavyweight focus area rules and when to accept the standard general caps. The HRD Corp Levy is an innovation investment portfolio that often sits idle on an institution's balance sheet. Mastering this specific matrix loophole is the most efficient way to fund high-ticket transformation without begging for new operational expenditure. This process turns dormant levy credits into technical capability, systematically assembling the skill sets required to manage these new digital asset classes. Competitors who decode these rules today will upskill their leadership faster, cheaper, and with far less friction tomorrow. Mastering the enhanced HRD Corp rules allows visionary leaders to purchase tomorrow's competitive edge using yesterday's sunk costs.